ultimately monetary policy, inflation, the impacts between, the relationship between inflation, rates, and yields has a fundamental impact on all asset prices. So, it is critically important and is part of our asset allocation framework. One of the things that we look at, two of the things we look at, inflation and rates. Formally, we do look at that. What's our outlook for the second half of the year? Ultimately, this is best guess. No one knows. The theme that we're running with at the moment is we're giving risk assets, and we're giving particularly the names that are fundamentally supported in our portfolios the benefit of the doubt. So, we've covered it, but Goldilocks is challenged. The political cycle, once again, particularly in Europe, partly in the US as well, is really highlighting polarization. The UK, actually, interestingly, might well be swinging the other direction as we speak. But markets are now partly seeing some volatility, and we could expect some volatility in the second half of the year, depending what the policy outcomes of changing governments might be over time. To get to your question specifically, I think that, the market will begin to price a Trump win in the next quarter, if that looks likely, which may mean higher yields. It may mean higher rate expectations or market prices thereof, certainly in the short term. Ultimately, earnings and free cash flow growth of the businesses that we own are supporting the share prices of those businesses. And that's what I mean by giving them the benefit of the doubt. What we're hearing from company management is, they are hearing about all of this negative, macroeconomic backdrop and news, but what they're seeing from their customer base is generally positive. That's the last that we heard from them. So we're about to go through a reporting cycle now. So we'll be able to update on that view. We continue to see a path towards lower inflation a bit further out, 12 to 18 month view, as discussed. So we remain 52% in equities, roughly 20% in both alternatives and fixed income, and 8% in cash.